Joining us now is Simon Maughan. He's head of sales and distribution at MF Global. Simon, always great talking to you. Should European markets be this optimistic?
Well, at the margin, the news is positive because, let's face it, at the end of last week, we were pretty desperate. We didn't know what was going to come out. We've seen at least a plan. We've seen that the Germans are probably winning out the battle against France and pretty much the whole of the peripheral nations, in that the ECB is not being actively involved. There is going to be a large default, or call it what you will, but it's effectively a default on Greek debt. Whether that's good, whether it's bad, it is progress towards some sort of a solution. Clearly the big picture problems aren't solved, but we're edging towards that solution.
That would be dependent, though, on German lawmakers agreeing to what Chancellor Merkel brings back home.
Absolutely, and that's why I think it's pretty important that it is very much the Germanic view of the way the world's going to look that is being enforced upon the rest of the nation, because it is ultimately Germany that foots the bill, but it's also the German lawmakers that could potentially kick up the biggest problem. And therefore, those two crucial elements, that the ECB is not actively involved in monetising, i.e. there's no quantitative easing, and that rather than leveraging up the EFSF to incredible proportions, we actually do first and foremost a write-down of banks and bondholders in Greece. Those two things should be enough to allow Merkel to get passage through the German Parliament.
So how are traders there, the ones sitting all around you, reacting or positioning themselves ahead of the October 26th great unveil?
Well, it depends which market they're in. If they're in the equity market or directly behind me, they're looking at the bond markets, it's still a pretty miserable picture. Even though there's green on the screen, certainly in the equity space, volumes are still relatively low. And I don't feel that there's a great deal of enthusiasm. But if I flip over into some of the other asset classes, talk about high yield, for example, where here in Europe we're expecting to piggyback on the strong inflows they've seen into US high yield last week in particular, but 6 of the last 7 weeks. Or if I look in commodities, where there was a surge in activity in WTI crude last week, sharp contrast to the volumes in oil and gas, there is a lot more enthusiasm.
But talk to me about the level of liquidity, particularly in fixed income and some of those alternative spaces. Here in the U.S., I hear fund managers complaining about liquidity drying up. Are you seeing that in your markets?
Well, yes, but it's the fund managers who are sitting on the cash. I mean, there's not much that we can do about that. If they sit there kind of cashing out positions and then complain there's no liquidity in the market. At the end of last week, what we definitely saw was proprietary desks taking risks off the table, no doubt central instructions to do that. We also saw hedge funds saying, hey, look, we just don't know what's going to happen. Let's cash out, all risk off the table. They're coming back today. They're looking at the situation. They're thinking, OK, I don't like it very much. Still long term, I'm pretty bearish on the outlook. But look at the screen. It's going up. I can't afford to miss this train.
All right, Simon, thank you very much.